Okay, let's talk about taxes today. Taxes on property. Recently I was asked by a lady from outside Ireland who's thinking of buying a property in Ireland about the tax situation insofar as property tax. How does property tax affect Irish houses or Irish residential properties? So there's a couple of taxes you need to be concerned about, whether you're buying or whether you're selling. Let's just say, for the sake of argument, you're buying a property. Firstly, you're going to have an ongoing local property tax. Local property tax, LPT, is an annual tax based on the valuation of your property. So that's the ongoing annual tax you have, LPT. Prior to that, there was a forerunner tax of LPT called NPPR tax. That's non-principal private residence tax. And that went from 2009 to 2013 and was administered by the local authority. So each county council would have looked after NPPR in the particular county in which the house was located. What you need to be concerned about if you're buying a house, second-hand house, or indeed a new house, but certainly buying a second-hand house, you need to be concerned that there's no outstanding liability on the property arising from the NPPR tax from 2009 to 2013, or there's no outstanding liability today in respect of LPT. In relation to NPPR tax from 2009 to 2013, what you're going to be looking for, or your solicitor is going to be looking for, is a certificate of exemption from NPPR tax from the vendor's solicitor, or a certificate of discharge from the vendor's solicitor. Either of these certificates will be issued by the local authority. So Meath County Council, Longford County Council, Kildare County Council, wherever. If it's a certificate of exemption we're talking about, then obviously the person that was living in the house is going to have applied to the local authority for an exemption in respect of NPPR. And you get this exemption if it was your principal private residence, because remember, the NPPR tax is non-principal private residence tax. So if a person was living here in Enfield in a house between 2009 and 2013, and it was their principal private residence, and they're now selling their house in 2020, they need to get a certificate of exemption from Meath County Council confirming that they were exempt from the tax between 2009 and 2013. On the other hand, if they weren't exempt, well, then you need a certificate of discharge. So that person will have to have paid the NPPR tax at the time, or pay it now along with all the penalties and so on, and give you a certificate of discharge. So that's LPT, which is the ongoing tax. NPPR tax between 2009 and 2013, it could be a charge on the property, so it's important that there's no outstanding amount due to the local authority arising from that tax, because it could be a charge on the property. In other words, when you buy the property, you could find that there is a charge on it arising from somebody else's liability. That's why you need a certificate of exemption or a certificate of discharge. In relation to LPT, local property tax, what's going to happen is, if you're buying a property and the sale is going to close, for example, on the 1st of September, what you do is vendor and purchaser solicitor will calculate the local property tax for the year, and they will apportion it then between the time period from the 1st of the year up to closing date, and from the time of closing, the completion of the sale, to the end of the year. And they will apportion then, or divide up, the local property tax between the purchaser and the vendor. So the vendor will be responsible and will discharge it up to date of completion, and the purchaser will be obviously liable for the balance of the year. However, what happens in practice is the vendor will pay for the whole year and then will just take the balance back from the purchaser on completion. So the solicitor simply does a calculation or an apportionment on closing, and they divide up or divvy up the year's LPT, and so both parties pay their fair share. The other tax obviously you need to be concerned about in relation to property is stamp duty. Stamp duty is essentially a transaction tax, and it is a tax on the value of the property, on the value of the deed of transfer on the property generally. So if the property is for selling for 250 grand, the deed of transfer is going to say that the property was transferred for the consideration of 250 grand, and the stamp duty is going to be 1%. That is 1% of 250 grand, obviously 2,500 euros. So they are the three main taxes you need to be concerned about if you are buying or selling a residential property in Ireland. If you're selling it, obviously you need to get your house in order and ensure that the LPT is paid bang up to date, including for the entire year in which you are selling, and you need to ensure you have a certificate of exemption or discharge in respect of NPPR, and you can get that from your local authority. Your solicitor will give you a hand to do that. All you do is fill out a form and you do a statutory declaration for the local authority, and if they are satisfied that you were indeed living in the house for the period of time in question, 2009 to 2013, they'll give you the certificate of exemption, and that's it, you're off to the races. Hope you find this video useful. If you do, I would appreciate if you gave it the thumbs up down below. Thanks a lot.